Hey yo, what's poppin' guys? It's your boy Dennis Grizzard back at it again with another video. Thank you guys for tuning in. Here on my page we talk about personal finance, investing, saving, entrepreneurship, and credit. Thank you guys again for coming and checking out the page, man. I really appreciate it. This is my third video. If you don't mind, please hit the like button, subscribe button, leave a comment, let me know how I'm doing. Hit the bell for notifications so you know when I drop new videos. It's really been a great week for the first two videos that I dropped. We got 40 new subscribers. That's really inspiring. That makes me really happy that you guys are here and enjoying the information that I'm giving you. As I learn, I just bring it here to the table with you guys. So today, we're gonna talk about stock investing. Me personally, I'm just getting started in stock investing. I've been investing here for about a year and a half, and I'm just learning and getting better at it as I go. I'm still always tempted to pull the money out because I'm a real human and I have real emotions. But if you can remove emotions from the stock market, it can be a really good chance for you to invest and take advantage of compound interest moving forward into the future. So thing number one, you guys have to know why you're investing. You have to know that the stock market is not gambling. You can make money in the stock market, but you can lose a lot of money. And you have to go into it with the understanding, knowing that either one can happen. You don't go in for a quick lick. It's not gonna be like hitting the lotto. It's not a get rich quick scheme. It's saving and investing for your future, for you to take advantage of compound interest, like I said before. So go into it understanding that this is not a get rich quick scheme. Don't invest trying to get, become rich overnight with a $30 investment in Apple. It's not gonna happen, man. Number two, don't focus on the amount that you're investing, but focus on the consistency. Perfect. You want to make sure that whatever you're investing in the stock market, you're doing it consistently over time. So you're just paying consistently into the stock market, investing and letting that compound interest hit, because you don't want to focus on, I'm going to invest when I get to this amount, and then just clump it into the stock market and never invest again. You guys want to make sure that you're investing often, because that's how you grow your money. Even something as small as $10 a week. $10 a week, it doesn't sound like a lot, but if you do that consistently for 30 years, you would have contributed $15,600 to the stock market. But if you take in consideration 7% returns on your money from the stock market, then your money, your $15,000 would be worth around $53,900 and something dollars. So you would have made that much of a difference just investing consistently and not really worrying about the fluctuation of the stock market. You got to make sure that you stay consistent, man. Stay consistent. Number three, you want to save money with the purpose of investing. So every time you get your check every 2 weeks, you have your bill money, you have your food money, you have your rainy day fund money, you have your fund money, and then you want to make sure that you have your investing money. No matter the amount, you want to save it. That way you're not taking food off of your plate. You're not taking food off the table. You want to make sure that this money is not going to be missed when you invest it. It's money that you intended on investing the whole time. So we're going to put that money in the stock market and forget that we even had it. Just forget about it. Also, another good way to get into the stock market is if your job has a 401k match. I know a job that I had previously, they did 6% as their 401k match. So if you contribute 6% of your check, they will match that 6%, giving you a total of 12% every time you get paid going into the into your 401k, which is putting money in the market. You don't want to borrow against this money. You don't want to take money from your 401k. This money is for your future. So let it grow your future. 12%, it sounds pretty good, but that's 6% of free money. You don't want to miss out on that. You always want to take advantage of that. Always take the free money. Always. Number four, you want to really invest in what you believe in. You have to believe in the stock, and you have to know that it is a good stock to invest in. You want to make sure that you invest in hitting the like button down below, leaving a comment below, and hitting the bell for notifications, subscribing to the channel, because that could be good for your future. But anyway, back to the video. You want to make sure that you invest in stocks that you believe in. These stocks can be growth stocks, individual stocks, they can be tech stocks, they can be Starbucks, they can be ETFs, they can be anything that you actually believe in. That's where you put your money, because you believe this company is going to grow. And you don't look at the dividends, because dividends change. You don't want to look at the payout over time, because that always fluctuates. You don't want to become like watcher of the stock market to make your decisions, because then you end up making bad decisions based on past evaluations, and you don't want to get caught up in that. Next, number 5, we're going to talk about investing using the dollar cost averaging. If you have $3,000 to invest, you don't want to just dump $3,000 into the market. You want to kind of break it up a little bit. You break it up and you do maybe 100 this week, 100 this week, 100 this week, or 200 this week, 200 this week, 200 this week. That way you're kind of taking your risk out of it a little bit better, because you're not buying too high, you're not buying too low, you're just kind of riding the wave and how it consistently grows. You put money in as it goes up, you put more money in as it goes up, and then your money's gonna just consistently grow. You still wanna buy low, and then when it's time to sell, you sell high. But if you're investing for long term, you're not looking to sell, but you do want your money to grow. But if you're looking for short-term money, you wanna buy as low as possible and then sell high. But you're gonna have to watch the news, you're gonna have to keep up with what happens in the stock market, just so you know when to sell and when you know that the price is gonna hit the top. It's really hard to time the market. Don't try to time the market. If you're watching my video, do not try to time the market. It's next to impossible unless you're really good at it. Number 6, what brokerage account should you get? My suggestion is anyone that you know online, any of the mainstream brokerage accounts that you see online, you can try them all. Put in the bare minimum amount of money, see how it goes, see how you like the platform. You can even use Cash App, you have Robinhood, you have M1 Finance. You have all of these online opportunities and ways that you can invest your money. And I have links down below. You get a free stock or some free money when you sign up for it. So you're not really losing anything, and there's kind of an incentive to sign up and see if you like it. It's best to use one of these first, see how you like it, get your feet wet, try the stock market, see how you feel, see how it makes you feel when you invest your money, and then you move on to the bigger and better things. You have your Fidelities, you have main accounts like that. So eventually you'll get to that if you want to do some sophisticated trading. But at this level, if you're just getting started, it's best to just try small. Start small, but start. Make sure you start. So once again, I want to thank you guys for coming to my channel. My name is Dennis Grizzard, and here on my channel, we talk about personal finance, investing, saving, entrepreneurship, and credit. If you're interested in videos like this, please hit the subscribe button, hit the like button. Leave a comment below, and also comment below and tell me what you guys are invested in, and tell me some tips and tricks that you guys use personally to invest in the stock market. I would love to hear it. I'd love to have a discussion with you guys down below. So thank you again. We'll be here again next week. 2 videos every week. I appreciate you joining us. Peace.